In order to maximize gains and reduce losses in crypto, it's important to have a current foundational understanding of the big picture when it comes to the three primary areas of market analysis. This includes fundamental analysis, which is economic or political news and other social influences, technical analysis, which looks at the price history to predict future moves, and sentimental analysis, which doesn't get nearly as much attention as the other two, but looks at what all the traders feel about the market based on the positions they're taking, regardless of whatever information is out there. So I'm starting a new series called Macrocrypto, where once a month we're going to be zooming out, being as objective as possible and having a balanced look at these three key areas so you have the basic information you need to make better decisions with your crypto. We're going to be looking at this from the perspective of leverage trading, and we're going to be using these bits of information from these three areas to help us formulate conservative positions that we feel are going to be better over the long term. And while there's no absolute way to know where the market's going for sure, this should help us to put aside some of our biases and allow us to enter positions that we feel are going to be solid positions based on the information we have at hand. If you're new to the channel, my name is Clover. We're focused here on decentralized applications, trading, and other passive income opportunities, so make sure you're subscribed with bell notifications on so you don't miss out. In this monthly series, we're going to be looking at some of the information in the early to mid-month time frame, as that's going to give us a little bit of a better set of information to work with. We're going to be spending several minutes in each category covering the most relevant topics. If you're just interested in one particular topic and want to fast forward, I have that timestamped in the pinned comment section below. And at the end of this video, we're going to be looking back at our monthly history and seeing how we've performed. And also, I'm going to give you my prediction moving forward on where I see the market going over the next month. We're going to be looking at fundamental analysis first because it can trump the other two in terms of its importance with major announcements that happen in the world. So a perfect example of that is some of the information that we saw out of China. We saw the price of Bitcoin, jump 40% in one day. Some negative news came out of China. We saw a huge decline in that day. So it has a significant impact regardless of what we're seeing in price history with technical analysis or what some of the traders may or may not feel, because they can instantly switch their positions based on some major news that comes out. So that's important to take note of. And what has been the major news over the last month or so? Well, it's been the potential war that we might have seen with the US and Iran that has had a very positive impact on Bitcoin's price. We saw Bitcoin really start to rally once that news had come out. There's tons of crypto media companies and YouTubers that tend to focus on the news, so it can be very subjective, but for the purposes of this video series, we're going to be taking a look at the top 3 stories or so that have had the most impact on Bitcoin's price. Certainly, if you disagree or you feel like I'm leaving something out, be sure to let me know in the comments section. But I feel like we all can agree that the potential war with Iran and when that news broke definitely had a significant impact on the price of Bitcoin. This is a recent article that just came out that I feel is pretty relevant because it's giving a little bit of an overview of some of the regulations that are going on in some of the different regions around the world and how that's really kind of impacting things. It hasn't had as much of an impact on the price of Bitcoin per se, except for China. That seems to be the one exception. But I think the initiatives that they have with the European Union are pretty interesting. They're talking about a new anti-money laundering directive, which is going to be more specifically targeted at crypto and requiring crypto exchanges and wallet providers to be regulated like banks and financial institutions. And one of the other interesting elements of note is the European Central Bank President, Christine Lagarde, who's been in the news lately with some of her statements about crypto, is wanting to take a more active role in the digital currency field and wants to be ahead of the curve. And one of the ways they're doing this is they are actively working on their own digital currency, which they say is not going to discourage private sector solutions, but they are imposing a lot of regulations while at the same time starting their own cryptocurrency. So that gives you a little bit of an idea of some of their intentions. The other one that's been in the news has been the SEC, because if you've seen over the last few years, a lot of the regulations in crypto inside the US have really fallen on the SEC. Some of the other agencies really haven't picked up the slack. It seems to be like that's where a lot of the regulatory oversight is going to fall, is on the SEC, and they've been more proactive going after companies and really imposing fines and penalties and things of that nature. It hasn't been very positive news out of the US. And a perfect example of that is Telegram. They've been battling, back and forth with Telegram's ICO pawn that they released, and so there's been some big money that's been proposed in terms of fines and whatnot, and so that really seems to be their their aim and goal, which I don't really see that being a very viable long-term solution in the grand scheme of things, because a lot of things are just going to go offshore, and it's not really going to discourage a lot of the innovation behind crypto. It's just going to move around the US framework into places that are more crypto friendly. So a lot of times when you see some more negative news come out of the US when it comes to some of these things, it'll actually have a positive impact on price. But this has been around for a while. It hasn't really impacted things too severely, I would say. There's a few initiatives in the States, but the big one has been China. And China's been the one that's really been at the forefront of what's been impacting the price the most in terms of regulations, because of the way that China is really, it's a communist country. It's a very, everything is really controlled there, and when they come out and they say something, because it's the largest population in the world, it's going to have a significant impact on the price. And we just saw that a few months ago with some of the positive news that came out of China, and you saw the price of Bitcoin just skyrocket 40% in one day. So that's how a lot of this type of fundamental analysis can really impact the price. And so it's good to take note of some of these bigger stories in crypto. Over the last 24 hours, we've seen the price of Bitcoin really rally to 2-month highs, and there's been some different theories on to why that's happened. These big moves in the market, there tends to be something going on in the background that's really causing a lot of this, and this article right here gives a lot of that credit to this new CME group's Bitcoin derivatives options that they've launched, which is competing with Box initiative. And so these initiatives, they tend to have a little bit of a mixed response on these different exchanges. You can see that when there's some news that a lot of the run up to 20,000 in 2017 had to do with Bitcoin derivative options, and subsequently a lot of the price crash that we saw after that was the ability for institutional investors to short the price. And the Box news was another big one, and that tended to have a negative impact on the price, because the volume wasn't there, it wasn't as anticipated. So this tends to be to paint this new initiative as something that's a little bit more positive, because institutional investors were anticipating this and they jumped on this, and that's why we saw the volumes that we did. So this is overall painting that this new CME group exchange and their derivatives market has had a bullish impact on the price, at least over the last 24 hours. Switching our focus to technical analysis, we're going to be looking at 3 of the most popular free indicators that you can use, and we're going to be looking at the larger time frames and trying to get a little bit of an idea on where we feel the price is going to go over the next month. And so if we're taking a look at the daily on the Bollinger Bands, which is what we're going to look at first, which measures support and resistance, we can see that it's been really hitting the support at around 7,000 for the last about 2 weeks ago for like the last 2 months. And over the last 2 weeks, we've seen a little bit of a rally, and part of that may be because of some of the fundamental analysis that we just went over, but we can see that the price has really started to turn bullish. However, you can see on the MFI, which is the money flow index, which is looking at price and volume on whether it's overbought or oversold, we can see that it's now in a bought position. And so this is indicating to us on the Bollinger Bands and on the money flow index that it would be a good time to short. However, if we're taking a look at the MACD, which is a little bit more complicated, but we're just going to briefly look over the basics of it because it is measuring convergence and divergence. And so if we're looking at this right now, we're looking for when these are going to cross. As you can see, like in the history right here, over the most recent history, you can see a cross right here, and it started to come down. And if we can move this around a little bit, you can see there was a few other crosses right here, it turned bullish, and so this tends to be another pretty good indicator for looking at price. And so there looks like there may be a little bit more room to the upside based on the MACD indicator. However, if we're taking a look just strictly at the Bollinger Bands and the money flow index, this is giving us a overbought indicator, and would be a good time to try to look at opening a short. So that's going to be over the short term if those indicators remain steady and remain in those positions. And we're just looking at the daily. If we zoom in a little bit, we always want to start with the larger time frames and try and move down on this a little bit. So if we're looking at the 12-hour, we're kind of getting some of the same indicators. You can see that the money flow index is starting to point down on the 12-hour. And was nearly about ready to cross. We just saw another breakout here recently, basically over the last 24 hours. And so we're seeing that, the divergence start to increase a little bit more. Now, if we're taking a look at a little bit of a smaller time frame on the 6-hour, we can see that, again, this is very high on the Bollinger Bands in terms of its resistance and on the overbought indications. So this may be a good opportunity based on this to look at, it may have a little bit more of an upside, maybe a few more $100 before we look at some of those indications to reverse themselves and start to see a little bit more of a bearish indication based on those three basic indicators. Technical analysis can tend to contradict itself on different time frames, and so generally it's good to take a look at the macro cycles, the largest cycles we can, and then work our way down, and that's going to give us a little bit of a better indication on the shorter time frames on where we're seeing things go on a more immediate basis. But this is taking a look at the monthly, and we can see over the last 5 months we've been in a downward trend. And if we're looking at the history, we can see that the downward trend that we were in previously lasted over a year. So if we were to take history repeating itself, we could anticipate that that trend is going to continue over the next several months until we get a green candle, until we get confirmation of a trend reversal. But if we're taking a look at the money flow index, we can see that we're slightly overbought, and so there's still a little bit more room to the downside. And also on the MACD, we can see that cross, and when you see that cross and a red dot on that, that's going to give us the indication of a bearish reversal. And so there's, again, on the monthly time frames, we're seeing a little bit more of a bearish indication, even though we had quite a bit of an uptrend here recently over the last several days. And you see that if we're even taking a look at the weekly, the last 2 weeks, we've seen it trending up. And even here, we can see that this is about to cross and give us a little bit more of a bullish indication. The money flow index is trending up. So if we're taking a look at the weekly, it's giving us an opposite indication that we might see a little bit more of a upward trend. If we can, zoom in on maybe say the 5-day, just kind of work our way down to the daily and take a look at some of the different, indications. Again, we're seeing another cross on the MACD. That's giving us a bullish indication. We have a little bit more of a bullish indication on the 5-day. Let's take a look at the 3-day. Just kind of working our way down. It's starting to basically press on the resistance of the Bollinger Bands. So, we may see either a little bit of a trend reversal, or we may see a continuation of that. So this is, some of these different time frames, you can see how, like if we're taking a look at the daily is a little bit more bearish. If we're taking a look at, the 3, the 5-day, and the weekly, that's a little bit more bullish, and the monthly is giving us a little bit more bearish indication. And so all of those conflicting signals are, giving us a little bit of an indication on indecisiveness of the market. And so, again, we can see on the money flow index, we are, overbought, and we are also, pressing up on the ranges of these Bollinger Bands. And so, just looking at the technicals based on those 3 indicators, we see, kind of this little bit of a range where over the longer time frames, perhaps over, the month, we could see, again, a continuation of the downtrend, even though perhaps with some of the recent news that's given us a little bit of a pump, that might not be sustainable over the long term, and that is, perhaps where we might see a little bit of a trend reversal onto the downside. Technical analysis can tend to contradict itself when you're looking at different time frames, and so generally speaking, it's good to take a look at the largest time frames and then work our way down so we can get a better idea of what's going on. And so if we take a look at the biggest time frame, the monthly, we can see that we've been in a downward trend over the last 5 months. We have 5 red candles in a row, and the money flow index is slightly overbought, and the MACD is showing a bearish cross. And so we could reasonably expect, based on the monthly, that this is a bearish sign. However, if we take a look at the weekly, we can see over the last 2 weeks we've been in an upward trend. The money flow index is coming up, and we are nearing a bullish cross on the MACD. And there's also, you can see like the moving average here, like we're just basically crossing over the moving average. And so, this is giving us the opposite indication. And so it's good to kind of, work our way down. Even if we take a look at the 5-day, again, we're seeing a bullish cross on the MACD. Looks a little bit oversold on the RSI, perhaps some room for the upside. If we take a look at the 3-day, it's a similar story. We're looking, this is looking bullish based on those 3 indicators. Now, if we take a look at the daily, we can see that it looks as though we are a bit oversold, or a bit overbought on the Bollinger Bands, on the money flow index. However, there is a little bit of divergence on the MACD. So what this is indicating to me is that we still might have a little bit more room to the upside before we again see a little bit more of a downward trend. And that's what I'm reading off of these charts when we're looking at the bigger picture based on these 3 indicators. Now, looking at sentimental analysis, there's 2 schools of thought. Basically, you can go with what the majority is doing, and there's a few different tools that can give you a barometer of the longs versus short. This is one that's coinfarm.online that's looking at BitMEX, one of the exchanges with the largest amount of volume. There's a few different indicators out there with a few other exchanges that measure the longs versus shorts, but I feel like this is a pretty good one. It gives you a good analysis of the percentages between the positions that people are taking, and you can also this is a little bit more in a shorter time frame. It's a little bit harder to zoom out on the longer time frames to take a look. There are other ones like this Blockchain Whisperers, which will give you a straight percentage of the longs versus shorts, but it doesn't really give you a history or a graph of some of the the previous percentages. And so unless you're tied into the market and looking at this all the time, you wouldn't really know if that's a high or low. But these numbers do tend to be a little bit less accurate. Like you can see here, the longs are 61%, and I think that's over a longer period of time. The market just recently has changed to the downside, and you're seeing more people shorting. Now, the other school of thought when you're looking at sentimental analysis is looking at what the majority of people are doing and where they're putting their money, and also looking at where the whales or some of the top traders are putting their money. And that might give you an indication on some different ways that the market can be manipulated. So if you're seeing a lot of people taking a long position, say over 60%, the price can only move so high in that situation, and so there might be a lot more opportunity to the downside. So this is a great tool on OKEX. I've left this link in the description below, but if you scroll to the bottom here, this is looking at Bitcoin's top traders, the top 100 traders on OKEX, and where they are putting their positions. And so this is a great tool to see what some of the largest traders on one of the largest exchanges are doing with their money. And so you can see, just earlier, about 24 hours ago or so, you saw a lot of people starting to take shorting positions as the market was really pumping. And it's switched back and forth. It's been a little bit indecisive, but this is another great tool. You see a lot of people going long, a lot of interest in that, and it tends to stall out. If you see a lot of the top traders are starting to take a shorting position, you might see a hard rejection in the price because of the amount of funds that can be put into shorting positions and the way that the market currently has been able to be manipulated into different positions based on some of the different analytics that we're able to kind of sort through. And so this is a great way to look at a few different things when you're looking at some of the top traders, longs versus short ratios. And so I think for this, the theory holds true that if you're seeing I would say somewhere between like 53 to like 58% of the people going long, that might be a good time to go long. If it's under or above that, you might see that as a situation where it might be a good time to go short. And that's just one way of looking at the market. Another tool that you can use to gauge the overall sentiment in the market is the Fear and Greed Index, which takes a look at a number of different factors and weighs them a little bit differently. You can see some of the sources. It's measuring volatility, market movement, volume, social media, surveys, dominance, and trends. And so it has a different weighting structure to this. This has been something that's been in the works since early in 2018. And it gives you a little bit of an indication on kind of the overall feeling of the market. And so you can see, lately, since the prices have really been plummeting since, 10K, you've seen this all pretty much below 50 for, all the way back in the October, early November timeframe. And just recently with this new surge, we're starting to see a little bit of interest over the 50% mark. And so if we zoom out a little bit, you can kind of take a look at the history of kind of when we were looking at over a 50% market. This was kind of early in the springtime of 2019 is when we saw kind of a huge ramp up during that time. And so there was an increasing greed index in this scenario. And when you see it cross over the 80% or even below the 20%, those are some ways to look at the market being overbought or oversold in that situation, and it might be a good opportunity to take the opposite. And also you can kind of look at a situation where it's been low for a long time and you're starting to see a little bit of an uptrend, and we're seeing that lately. It's been a while since we've seen that, and so if this continues to remain high, that might be a good indication. Although you can see here last month it was very, very low, extreme fear, but this is below the 20%, the 20 mark, and so that might be a good time if you're looking at it that way for things to correct, for things to turn around and go in the opposite direction. And so perhaps that's what we're seeing here, and this is just a few other tools to kind of look at the market, in some different ways. And so you're looking at the three different areas. You're looking at fundamental analysis, all of the different news and sources and things that are going on in the regulatory environment. You're seeing things, when we're zooming out on the historical scale of some of the price indicators, and we're also looking at some of the sentiment with traders and how they're feeling about the market. And so gauging with these three, sources of information and these tools, it gives us a little bit of a bigger picture on where we can anticipate some of the trends going. So I was trying to present those three types of analysis in an objective format and just looking at the raw data on larger time frames to give us a little bit of an indication on what the current trend is. So if we're looking at the fundamental analysis, I'm looking at that as slightly bullish. With some of the news that's come out, that can certainly change with a lot of the crackdowns that we're seeing in the regulatory environment, though that hasn't lately had as much of an impact on price. And the CME group, just recently, that seems to be what's triggering this recent uptick with Bitcoin, where we've seen about a $1,500 price increase in just the last few days. So if we're looking at technical analysis, I'm seeing that as a little bit contradictory. We're seeing a little bit of a bearish trend on the daily and also the monthly. However, if we're looking at the 3-day, the 5-day, the weekly, that's looking a little bit more bullish, though that trend could definitely correct itself over time. And so I'm seeing the technical analysis as slightly bearish. And then, when we look at the overall sentimental analysis, we're seeing a little bit of an uptick in interest, but we're also seeing a lot of the top traders taking shorting positions, especially with this recent, surge in Bitcoin's price. And so, some of these things tend to contradict themselves a little bit. I like this, looking at the Google Trends, because that'll give us an indication on the overall public's opinion of Bitcoin. Are people searching for it? Is there an interest there? And we haven't seen, a very, very good interest since basically the summer of last year, when Bitcoin was trending towards 14,000. And even when we saw, it come up to, to 10,000, that was a very fast time frame when that really, that was kind of a, went from, in the 7,000s or so, up to over the 10,000 mark, very, very quickly. Didn't really have enough time to catch on. And then we saw a huge retracement down into the 6,000s. And so, I think that the overall public's opinion is not quite there yet. And so for the next month, my prediction is that we're going to see a little bit of a consolidation phase, and we're going to trend down, and we'll see how that plays out here. But that's the way I'm reading, the bigger picture when I'm looking at the charts and looking at those three sources of information as objectively as I can. If you guys are new to trading or looking for another exchange to get started, Dudex is offering a $70 sign-up bonus for people that deposit 0.2 Bitcoin. So you're going to have an opportunity to trade with $70 in free money, even if you didn't trade your 0.2 Bitcoin that you deposited. So that's a great way, zero risk, to get started, trying leverage trading, seeing if some of these strategies might work out for you over the long term, trying some of these macro strategies, perhaps with low leverage, somewhere between 5 to 10x leverage. That might be a good way to test this out, and you would be able to withdraw all of the profits off of that. So another opportunity for you guys to get started. I'm curious to hear your guys' thoughts on some of my theories on what we've been seeing in the market so far. Other than that, if you guys found this helpful, be sure to leave me a like. If you guys haven't already, be sure to subscribe, and I'll catch you guys in the next video.